Thursday, January 26th, and we have a lot to cover today. We are in the midst of a major long-term bullish breakout of a head and shoulder bottom, and most of the stock market indexes are something extremely similar. And basically the technical beginning of the bull market of 2023. If this breakout is legit, a little time will tell. Some price movement, obviously. So we're right there on the borderline as this late recording today at 12 o'clock California time, 12:05, has started. I always start out with the S&P 500. And by the way, there's lots of bullish and bearish engulfing futures as well, a few. I start out with the S&P 500. We are at the neckline of this head and shoulder bottom formation. If you have questions, email me at info@ersignals.com. We're going to have a website up soon. And the head and shoulder bottom low, I was definitely expecting around now. But we seem to have developed the shoulder earlier than expected and a little higher in price, and that was in December, late December. The lowest low being on 22nd. Yep, that's December 22. So we've gone all the way up to the neckline, and in the process, gotten above the 200-day moving average. We've gotten above the long-term bear trend line, which has started at January 4th, the beginning of this bear market, a year ago, plus. And we are starting to make new highs for several weeks. Again. And currently up about 3 points. We're right smack dab, in my opinion, at the neckline, which is the heavy green line. You can't see the current quote below it, but my cursor is right on it, 403.20, give or take a several. So now we look at some details because it's time to be very accurate in what's happening here. Indexes and the S&P 500 1-minute chart. And we've got today on the far right on this 1-minute chart, and yesterday, the day before, about 6 days, 6, 7, somewhere in there. New highs this morning, dropped back into some support, trading range in general for the last couple of days. Nothing super great about that. Doesn't have to be. If it's a good bull market, modest to minor support is going to start to turn the market back up again, which so far today, that has happened. A little double bottom around unchanged. And we are now close to the high of the day, although dipping down very modestly the last several minutes. Super detail. On the average, not for everybody, the daily data chart, again, looking pretty good. We are above that neckline by a slight little bit at 403 and change for the current quote. And the 200-day moving average, which has now been broken by 4 days with the closes above that. And another new high since December 14th. The one to watch for now is 410, I think 22, 410.49, call it 410 and a half. You start breaking that level, and you'll be making new highs for many months since September. A profoundly bullish closing price. Turning a lot of indicators, if they haven't already, that are intermediate to longer term bullish. Like the 200-day moving average now that has been crossed by a significant number of days, and again, higher highs. We have the supporting information in other indexes as well, but not quite the DIA yet. The Dow Jones Industrial Average has lagged behind and is in the middle of its trading range for the last 2 or 3 months. So we have 2 or 3 different highs to overcome here before we attack the neckline on its head and shoulder bottom, which is there, but the neckline slants upwards. So we're going to have to be a little more patient on this one, so to speak. We'll see how it develops. Now, the head was a double bottom in itself. That's very interesting, but it's still ahead of the formation. And, of course, the last shoulder low was, again, December 19, and in this case, 22. let's look at the QQQ real quick, because I got lots of stuff here. Major return information about trend changes and signals in other markets. The triple Qs, clearly new high ground for this particular rally starting in late December. We are well above and have been already for the last 3 previous days, the neckline. So it broke out of its head and shoulder bottom past tense and is making new highs. And now the next resistance level is going to be at 297. That's going to be equivalent to some significant new highs, not only in the DIA maybe, but way important in this S&P 500 for many months. So they're starting to pile on top of each other if this strength continues on the average, which frankly, I think has a damn good chance of doing so. Obviously, I'm talking very bullishly. You talked to me about a week ago, I wasn't in this mode, so to speak. The 2000 is interesting. I don't talk about it all that much. We did have a sell signal a couple of weeks ago. It didn't work very well. It dropped very sharply the next day, but that was the low. You could have, should have, would have made some money on that 24-hour trade, but depending upon your time frame, you're stopped out for sure, because we made a higher high today than that bearish engulfing ER signal day. But we're banging against some resistance right at today's highs. So again, another significant wave of strength. I'm talking for the spider, probably 3 to 5 points, maybe more. This is going to end up making new highs for the last many months period, and hopefully staying there. And that'll be a new high since August. Again, long-term bullish indicators have all started to, in my opinion, kick in. From now on, I'm worried about rally highs in a bull market, getting overbought, and looking for sell signals for a decent, significant enough to make some good money in a few days or whatever, short-term, relatively speaking, time frame. A bull market goes up slower than a bear market falls. So I expect to see some progress, but not quite as much downside as we had in 2022, excuse me. So I'm liking what I'm seeing overall, definitely in the stock market indexes. I'm hoping that it's 12:12 California time. In the next 45 minutes or so, we're going to see new highs for the day, and it might be quite a spurt also. Remember, the breakout day oftentimes contains gaps, and we did gap up this morning above yesterday's high significantly. But in a very short period of time, which is not abnormal, we came back down and closed the gap. Now it came down a little bit more, all the way to unchanged, and then turned around. And here we are near the highs of the day. Let's see what happens in 45 minutes. It's going to be exciting. Futures. Okay, let's start out with coffee today. That's a good thing to start out with every day, or tea, whatever your preference is. We got oversold very significantly a couple of weeks ago, and so far this rally is carrying up into resistance and near the probable rally high. We're getting almost overbought. We're very close to 173 and small change, a previous triple resistance area. So that's my candidate for a turning point back down. Next chart. This is live hogs. We have a bullish engulfing whopper. That doesn't guarantee it's going to work better than the other signals, but it's a big one. The lowest low for the trend down, and a new low for the last week or two, which was similar at support, quote unquote, was broken slightly this morning, and then it turned around like a ping pong ball being pushed underwater. Bang, right back up again, in the process making a bullish engulfing with oversold conditions, and that's a new high in the same day for the previous, what was that, 6 days, previous 6 days, correct. And it closed above the previous rally highs, all of them. That's a normally very good signal. So we're looking to buy it on a retracement in the next few days for ER3. ER1 is long. and made some scalping money today, almost assuredly. You have to look at the 1 minute chart to know that. The 1 minute chart, which is an overnight version, is almost assuredly long because it closed near its highs. But I'm not looking at the chart. The strategy does what it does, blah, blah, blah. Next chart. Nothing going on here in wheat. I'm going to say nothing because I've spent other time on signals and pass, pass, pass. We got a couple of signals, I believe. Whoop, 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 whoop. That looks like a head and shoulder top. Cocoa. The neckline is downward slanted too much for the normal pattern because it's going to come across this low right here and that low right there. The shoulders are about the equal distance apart from the middle of the head, which has got two highs to it, or it's a little lopsided, but body parts are there. So we need to turn around and come right back down again immediately, but we're not overbought, middle of the range of RSI, and nothing's telling me it's turning around. If it did, shoulder high, warning. Next chart. Corn, outside up day, but not oversold. Normally bullish by itself, but our strategy and unique code, and these are changes from the normal key reversals and RSI levels that we use for our signals. So it's not the same, although Wells Waller did teach me RSI. So we had a high here. That was a great one. And that was a great one. These two are okay. They didn't make much money and it was slow. That's about it lately. Next chart. Crude oil, neutral to slightly bearish. recently got slightly overbought, has been coming down a little bit, came up slightly today. Looking for sideways to lower. Next. Bonds, long-term base building activity, sideways trading range today, except for a little bit of a lower close. Last 3 days of the same range. Next. 10-year notes, same comment. Next. The minor new high for the move is in the E-mini, and of course this is a futures contract as well as a futures contract as well as the stock market index. Okay, I'm being distracted because we have an alarm going off on the S&P. There it goes. So I put an alarm line in. We're making new highs almost for the whole day. Interesting. Up 3.5, 403.80. We'll see what happens. Resize. Go back to what I was doing. Forex? No. Futures. And bearish engulfing a few days ago worked out very well. Yesterday was the lowest low since the sell signal, but it deserved a little bit of a rally for no reason at all. And I think that's exactly what we got. Now it has to turn back down or I'm going to be disappointed that I got a small profitable move out of it, but definitely profitable potentials. Neutral. Next. OJ, neutral. Next, except for that head and shoulder that's still trying to form. I'll go back and take a look at that again. Remember, there was a neckline underneath these lows. It disappeared. I'll draw it back in later. Next. Gold. Bearish engulfing ER sell signal. Apparently all the parts are there. Today's high must be slightly higher than yesterday. Yesterday being 194, 949.50. Today's high 149.80. Huh. 3 ticks. And an outside down day lower than yesterday's low in overbought condition. And remember, these are custom RSI readings, not our Wells Waller's, as well as a custom key reversal definition. So I'm bearish on gold immediately. ER1 is probably a loser on the close if it's still short. The scalp code probably lost a little money as well, but not the overnight. We don't know about that yet. Looking for a new short sale in the next few days. Next, we had a bearish engulfing early this week on heating oil. It has dropped off, and today's second day after the sell signal is a lower low, but it's a slightly higher close. I'd like to see nothing but sideways to lower for the next few days. Period. Next, platinum. We got the top of the damn market. I told you at the time, it's working out really great. Now it's been a couple of weeks. This is the lowest closing price by a long shot since the early reversal sell signal. It's not quite the lowest low, but usually the close is a little bit more important than the lows and highs, unless you're looking at resistance and support levels, which could very well change that statement a bit. Next chart. What can I say? Lower on platinum. 10-year notes. It's like bonds. They're out of place, aren't they? 10-year notes. Yeah, okay, I'll put them together later. Sugar, that head and shoulder top is now doing having some damage. This rally high today is quite a bit higher than I would have expected, which would have been around 20 and a half. It still doesn't kill the formation. It could be lopsided shoulders, which you see often enough, but there's no room for higher highs. If you get up to or even real close to the high of the move, which is 2120-ish, it's a double top, not a head and shoulder. It could still be bearish, but not the same pattern. And anything obviously above that, if it's a lot, would kill the pattern completely and turn it to a roaring bull for a few days. That's sugar. Next, coffee. We started with coffee. Good thing to do in the morning. And no other comments. We do have some information on Forex. We have a bearish engulfing in the euro dollar. I've been talking about it being overbought, a little bit too high on the average for the last week or two. So now we have an official new short signal, an outside down day, which turned our charts red, price action red. Classic. Assuming the end of the day is lower than the previous day's close, we are going to be selling short, sold short already, ER1, and looking for a move down. How much? I would suggest a minimum downside objective of about 106.80-ish, and very possibly 5 3/4, 105 3/4. So somewhere in that range seems very likely. Next is going to be the dollar index should be about the opposite, which it is. We have a bullish engulfing green buy signal officially in the dollar index. So they correlate very nicely today. Let's hope it works. Looking for a rally at a minimum on the dollar index DX up to about 103 1/4, and could get up into a little more resistance, significantly more resistance at 104 1/2. Next, dollar yen. Bullish engulfing already a few days ago. Never got down to the protective sell stop. We are still long on an ER3 trade. The dollar index, I'm sorry, that's the yen to the dollar to the Japanese yen, USD JPY, and almost a new high, and a second looks like highest close are matching it for the rally. Now, I think it's going to pop up quite a bit in the next day or two, because it's going to break through some highs of significance, let alone today and yesterday, but also 5 days ago and 3 and 4 days ago was a little bit higher, not much. So that's also close to the high of the reversal, bullish reversal day, and that should have some stops above it as well. Yep, that's exactly what I'm looking for, is a sharp little rally in the US dollar, Japanese yen next. Nope, I keep doing that. Aussie dollar to the US dollar, new high for the trend. But I gotta say it, guys, hey, and gals, new high for the trend, overbought condition. I don't want to chase this market higher. I'm waiting for a sell signal or some sort of downside correction, which I think is imminent, to buy it on a dip. Don't go running after bull markets on major strength, because you're going to be late to the party, and you're already, for most oscillators, probably close to or into, maybe well into overbought conditions. And that historically means you're buying the top. You're getting emotional about the trade. Nope, don't do that. Next chart is dollar Canada. No comment. Not much to say. Dollar Swiss franc. We bought it a few days ago, not doing all that great, closing with a probable small loss or break even. We're not stopped out, we're looking for strength. Got to have that upside follow through. Got to start to feel those new highs real soon, or this signal is going to fail. It did offer a very minor, modest for about 2 days profit potential, but not much. Nothing to brag about. A European dollar against a British pound. Pretty much neutral. I got to talk about sectors for a moment. We had a bullish engulfing the last couple of days ago on our first XLP symbol. Although we made a slightly lower low, stopping us out with the trade, the signal still seems to have some life to it. But officially, the code bumped us out of the trade. But it seems to have a little life. So I'm friendly, short term. Otherwise, nothing major here at the moment. There could be a gigantic bottom forming, like in the stock market indexes, with the lows and the same time frame last June. Then you got your October lows, and then you got recently. Actually, this looks a lot like what I was expecting for the S&P. Huh? How about that? Oh, it looks a lot like it. So I just didn't have this last quick break to the downside. Interesting. What is this? Consumer supplies, staples, consumer staples. That's my first choice here. IYE, bearish engulfing failed. We lost a little money on it. We never lose a lot because we always have a relatively close stop. And when it starts to move in our favor, we start to move with it based on minute-to-minute analysis. Literally every 60 seconds. Okay, not much of a comment. It's looking like it's going to try to go up a lot more. SMH, same thing. Broke out of a head and shoulder bottom. June or July lows in this case, July. We caught the bottom on October 13th, bullish engulfing, just like the S&P and a lot of other indexes. And now it's making new highs since then, since October. Very powerful stuff. Very powerful stuff. XLK. Breaking it today, like the spider. We got the bottom of the market. What the hell can I say? Last sell signal lost a little bit of money. And when that happens, the signals turn bad. There is often the follow through in the opposite direction I didn't expect because the signal was bad, but I'll bet it's a perpetuation of the previous trend. So interesting note. But still, okay, XLY. Breakout a few days ago, a week and a half actually ago, of its bear trend line, not a bearish head and shoulder bottom or even a double bottom, just a bear trend line. Some people might think it looks a lot like a neckline, and that's true if the low recently hadn't been a new low for the whole trend. That's just a bear market. Okay, it broke the bear trend line, came up. We got a good sell signal for a day or so, came down to the support line, previous bear trend line, now support, slanted downward, and bounced right off of it. This is a new high, and a new high closed by a nice chunk, approaching major resistance and getting overbought already. So we're about to top out at 147-ish in a day on a small top. Could be building a much bigger, longer-term bottom. XLF. Looks like it's going to pop to the top, break out like a lot of these other patterns. Same commentary. That was XLI. Now we're looking at XOP. New high close for the trend. Bad sell signal. Up we go. The stuff is looking more and more powerful overall. Second highest close for the move, or very close to it. By the way, the S&P 500 is now at 404.15, up 380. I believe that is a new high for the day. Hang on a second. Let's check real quick. Certainly through my resistance line, alarm line, and it just did it. That is a new high for the day. The daily charts are simply going to look better, more bullish. This is Thursday. We could very well get a lot more follow through tomorrow to the upside. We are now clearly above practically everything bearish that I could draw. Trend lines, moving averages, necklines. Resistance area, the last one of any significance close by is 10. and we're at 404 plus, and that's only up 3.5. A big up day would be 8, 9, 10, even more. That would be great relative to the net changes we've seen day to day in the last many months. On the downside, we had several occasions when it was going down 10, 12, maybe 13, 15, a few times during a couple of weeks. And remember, bull markets close stronger, higher, slower in general. They climb a wall of worry, where bear markets, it's a scare tactic. It's panic time on the downside. Nice, very nice. I'm going to leave you with that. The sectors are all looking very similar. Thanks very much. You have a great trading day. This may be the beginning of the bull market from a breakout standpoint of 2023.